This is the Bollinger Bands Indicator, exactly how traders see it on platforms like TradingView. It might look a little complex at first, but it's one of the most powerful tools for understanding the market's mood right from your chart. Let's break it down together. Bollinger Bands consist of 3 lines. The middle band is simply a moving average, usually set to 20 periods. The upper and lower bands are calculated based on market volatility. They automatically expand and contract around the price, which is what makes them so dynamic and useful. Think of them as a visual guide to the market's current energy level. Here's where it gets interesting. When the market is calm and price is consolidating, the bands tighten up, getting closer together. But when volatility suddenly increases and the market makes a big move, the bands expand to contain the price action. You can see this happening automatically in real time as new candles form. Low volatility leads to tight bands, while high volatility creates wide bands. So what happens when the price actually touches these bands? When price reaches the upper band, it can suggest that the market is overextended or overbought. Conversely, when price hits the lower band, it may indicate that the market is oversold. These levels aren't automatic signals to buy or sell, but they act as important warning zones that price might be reaching an extreme. Now, let's talk about one of the most popular Bollinger Band strategies, the squeeze. When you see the bands tighten up significantly for several candles, it's called a Bollinger Band squeeze. This compression often signals that a powerful, explosive breakout is just around the corner. Traders watch these squeezes very carefully, waiting for price to break out of the tight range with force. In strong trends, you'll also notice that price can ride the bands. For example, in a powerful uptrend, the price will often stay near or even push against the upper band for an extended period. In a strong downtrend, it will do the same along the lower band. This shows that the trend has strong momentum and isn't necessarily ready to reverse just because it's touching a band. Professional traders almost never use Bollinger Bands alone. To increase their accuracy, they combine them with other indicators like the RSI or MACD, or with classic technical analysis like support and resistance levels. Using another tool for confirmation helps filter out false signals and improve your decision. To sum it up, Bollinger Bands help traders read volatility, identify potential market extremes, and spot breakout opportunities all directly from the price chart. It's a fantastic tool for trading volatility smartly. Thanks for watching, and be sure to follow for more trading insights.